I blew my trading account almost. What's going on, guys? It's Christian from Stock Hours, and today I'm going to talk about how I almost blew my account when I first started day trading. So, the reality of trading is in the beginning, a lot of people are going to lose money. They might even blow accounts. They can blow one account, quit. That's how a lot of people go about their trading career. But if you want to be in it for the long term, you have to work past the tough stage and eventually find profitability. Um, but yeah, a lot of people in the beginning, obviously trading is not an easy thing to do. So losing money is very common. So I'm going to share with you right now. Um, this is basically what my account curve looked like when I first started. Obviously, this isn't what you want to see, but this was my reality. So, month after month, I was just red, more red, more red, more red, until I eventually finally got it. It clicked. But it's not just the flip of a switch. So the flip for me was through my journaling, and I was obviously journaling for months before I eventually became green. But through my journaling, I kind of made a set of rules for myself of what to do and what not to do, so that this um, account curve basically would be flipped to the upside. So I'm seeing green instead of reds. Um, but journaling, it helped me kind of identify the biggest mistakes that were causing most of this. So for me personally, um, the number one biggest thing that really hurt my account was that I was taking small wins but very big losses. So my red trades would be like 20% or maybe even more, while my green trades were only like 3 to 5%. So a reason for that is because I was sized in way too heavy, especially for where my knowledge was at the time. So um, whenever I saw green, I was like, oh, cool, I just made 100, 200, 300 bucks, whatever. But then when I saw red, um, it was too much for me to really handle or process. So yeah, it's cool to make 200, 300 bucks in a couple of minutes. But on the flip side, what if you're losing 200, 300? Are you willing to accept that loss? Um, and then if you're not willing to accept it, that two or 300 could very quickly turn to five, six, seven, a thousand, a thousand, not a thousand hundred. Um, so that's why sizing played a big part in this whole down curve or whatever. Because once I started sizing down, I was willing to accept small losses, 30 to 50 bucks. And then when I was green, then obviously I would, sell when I'm supposed to. Because one of my problems, like I said, I would take big losses and small wins. So now when you're sized in more lightly, you'll accept a small loss and then you'll let your wins play out since you're not in so heavy to where it's like, oh wow, I'm up this much money, let me just sell. You're actually gonna let your trade play out. So another thing, so with risk management, obviously sizing was pretty big because my psychology was all off. A lot of the way I was thinking was wrong, and one of the things I said with that is I was not respecting my stop losses because I didn't want to accept that big of a loss. I wanted to come back to break even, or let me just wait for a bounce and then I'll sell for a little bit less. But obviously, when you hit a stop loss, now I know better than to hold. Um, but at the time, I was really just hopeful in my red trades, while I was not really. I didn't have a thought out trade plan for any given trade. Really, it was very much hope driven. And also, like I said, I didn't let my green trades play out. So there would be some trades where, um, the whole stock hours chat would catch 20, 30, 40%, while I got out at 5% because I saw I was up $100 or whatever it is, and then I was like, oh wow, that's a lot at the time or whatever. And another big thing for me was over trading. So now I personally have a rule of, 2 trades is more than enough for the day. Usually there's not even two great setups for the day for me. But back, when I first started, I would take as many trades as possible. So, for example, Nor might signal something in the morning. Um, I would take it, I would be green, and then everyone would walk away. And then I would stay in front of my computer, and I would say, if I take this trade 5 more times, I'll make 5 times the amount that I'm up right now. And then obviously, with that, I'm not taking as good of trades. So let's say I'm up $200-300 on the day. Now I'm break even after a trade, so now I want to make it back, and then now I'm red $200, and that obviously is not a good practice long term. So sticking to a trading plan really helped me with the over trading thing. But this is just the beginning of my account curve. I want to go over some more pictures that I have, basically all from like journaling my trades. So these were mistakes that I've made, and this is just the first couple of months. This isn't all of my trading; it's just a couple of months. Um, but this is when I was red. So obviously, when you look at the biggest losses, if you focus on those before getting into like the smaller things, that's where you're gonna cut out most of your redness from, and then you can from there work on the rest. But for me, obviously, did not cut losses quickly, cost me the most amount of money. So once I fixed that, it made it a lot easier. So then the next thing is poor execution. With that just comes discipline and having a trading plan. So you're going to have profit targets and you're going to have a stop loss. And then that helps with the poor execution. But did not cut losses quickly. It was very much a psychological thing for me. I just didn't want to cut the losses. But over time, when you learn price action and you learn how stocks are supposed to move in a good trade, then you're going to know when to cut your losses or not. Even green trades, you're going to know when to cut them. So you can see some of these mistakes, even though they're mistakes, I was green, but this isn't a good green. Sold too quickly. I could have hypothetically made a lot more on these specific trades, especially considering I lost this much on did not cut losses quickly. Selling too quickly on green, I would hope that this would be much bigger, but obviously it wasn't. So when you're journaling, you're gonna find mistakes, reoccurring mistakes. The biggest mistakes that you're making are the ones that you want to fix, or like focus on the most. And then after you kind of get good at that or whatever, have fixed that mistake, then you can focus on the rest of these things. So for example, adding contracts, I didn't do it too much, but there are times I might be up and then I add when I really have no reason to. Trades where I take when there's no volume or like low volume, that's another thing to work on. But the main thing that really made the big difference is the number one thing that I did the most and then cost me the most. So that's why you want to focus on something like that. And then after obviously journaling and then working on the mistakes, my account curve completely reversed. So this is what it was before for months. I was still learning in this stage. So another thing is when you're still learning, you don't want to be taking on that much risk. You want to be risking minimal so that you can learn the right way. For me, I went through a lot of emotions and psychological things because I was sized in so heavy. But if I learned technical analysis and price action with small size, I could have saved myself tens of thousands of dollars. So this is what it ended up being after. After I worked on fixing these mistakes, really the main thing is did not cut losses quickly, and then selling too quickly on green trades, and then also over trading. So those are the main things I focused on here, and obviously it made a difference. Yes, there are still dips in the account, but look at the pops versus the dips. the pop versus the dip, and then now look at it here. So obviously, big move up, small move down, big move up, small move down. This is what you want to see. You don't want to see it, downtrending like this, obviously. So small move up and then big moves down. Because then basically this is just showing that your risk management is all the way off. And this is just the so when you're journaling mistakes, another thing to do is journal setups, how you perform in different setups. So for me, I was able to identify what I do best in. So when you journal all the time and then you see stats like this, it's going to be pretty obvious to you what your edge is and what you should kind of stick to. So consolidation breaks I did very good with. Price breaks, so for example, let's say Tesla's breaking $100 to the upside or whatever. That would be like an example of a price break. So things like that are kind of what helped me also. So not only focusing on mistakes, but looking at what you do well in different setups. So it looked like at this time I struggled right off open, since these morning breakouts and morning panics is kind of not that good. So that is something I kept in mind. Obviously, the market changes, so you are going to have to adjust the way you trade, the way you look at things. But at the time, this is kind of what I was working with. And then this is what my account curve looked like after this, basically. So you can see in the beginning, huge red days, small green days. But every time I had one of these green days, I felt very good. I was like, oh, wow, I just made 400, 500 bucks. Like, I feel great. And then I come back and then I lose 1,000, 2,000. So obviously the risk management was way off here. And it's very obvious when you visualize it like this. And then here, you can see there's much less red and much more green. Plus the size of the green is way bigger than the reds. So with this, there's multiple things going for that. I was sticking to better setups, so I was taking less trades, sticking to better setups, and my risk management was way better. I would cut my losses quicker and let my green trades hit targets, just like I was saying before. So that's something you want to make sure you're doing. But you can see just the visualization that my red days were so big. Even if I have 3-4 green days, I can just give it back very quickly. So this is basically a story of how I almost blew my account. I got very close. I didn't actually blow it, so I ended up working up from a small amount back to where I am now. So I made pretty much, or I made all the losses back, but it's very hard when your account is so small. So you want to make sure in the beginning when you're still learning to minimize your risk. Don't go in heavy with an amount you're willing to lose, because it's going to cause you to trade on tilt, trade bad, with bad rules, bad principles, or no principles. But over time, so for me, it took me probably like 5 or 6 months of journaling every day to get to this point to where I'm actually profitable consistently. So it's not easy, but it is worth it in the long run. So like I was saying here, this is where most people quit. So most people are done here. They say, all right, I'm just consistently losing every day for 6 months straight. And then they'll never get to the point where they're at this point. So whether it's because they're not journaling, they're not disciplined, or whatever it is, most people don't get to this point. So this is where they quit, and that's why they say 95% of day traders fail. It's a scam, don't do it, whatever. If you go about it the right way, then you can be profitable with it. But like anything, if you're not doing it right, any business really, like obviously you can lose money. So you want to make sure you're going about it the right way. You don't want to blow your account. It's going to demotivate you. But if you really want this in the long run, you're going to have to push through, keep journaling, keep doing the right thing, and you will come out to see a better day. So hopefully you guys enjoy my little story here. Leave a comment if you've had any of these problems, if you're struggling with problems currently, or if you've gotten past this little tough area over here. All right, peace.